Sir, what can the government do at this point? Apart from monetary policy and rate hikes, we already see that the prices are being passed on to consumers. And of course, this will hamper growth and consumption. It's just going to be a vicious cycle. What can the government do at this point? Is there still a possibility to take out excise taxes from oil, give subsidies to the transport sector, give more subsidies to employment? What can be done?
Well, I guess we have no choice if prices of oil continue to go up and the peso continues to depreciate, then some of these subsidies will probably have to continue with the transport sector at least. The consumers, unfortunately, will have to bear the higher cost of global oil prices, and I'm not sure whether the incoming administration is willing to give up the excise taxes, considering that the debt metrics of the country are already deteriorating. So it's really being caught between the deep blue sea, and the devil in the deep blue sea. So very hard choices that they have to make. I guess monetary policy has to really be more determined, less hesitant, I guess.
Okay, Jun, lastly, before we let you go, by how much do you see this making a dent on growth, especially in the second quarter? I mean, is a resumption of economic activity enough to actually offset these high levels of inflation?
Yeah, it's actually quite odd that, some analysts are only revising their growth rates for the Philippines upwards. Compared to us, we're actually revising it downwards. We originally thought it was going to grow at around 7.5% for this year. But because of this commodity price phenomenon arising from the conflict in Eastern Europe, we're actually revising it lower. So from about 7.5, we're only looking now at 6.5 to 7. Because of the impact on consumption, on the currency, and overall demand. So the recovery is going to be somewhat muted as a result of these headwinds.